The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Monday's market action, we saw kind of a mixed day. Pressure in Chicago wheat, while KC and Minneapolis wheat did their best to hold up on the day. A little bit of green and soybeans at meal. Corn largely stuck in the middle, quiet and cattle and hogs. Let's talk about this and take a look at what was happening on Monday's trade. John Heinberg with Total Farm Marketing joins us for market analysis here today on the show. John, good to catch up with you again here this week. I know you and I both are happy with our Packers draft that we got here with the NFL draft the last couple of days. I know that largely took most of my Thursday night, Friday night, and Saturday sitting on the couch watching the draft. What about you, John?
Yeah, I watched it a little bit in passing. I wasn't quite glued to it like I normally am, and trying to get some stuff done before the storms kind of came through. That was there. But again, a team that is younger gets younger and faster. So it's always encouraging and makes me excited for the season, because right now the Bucks and the Brewers just aren't kind of doing it for me at this moment. So
yeah, I know a lot of impactful players drafted as well. A lot of quarterbacks. We'll see if they pan out as we move forward. But it's always a fun time of year for me is to watch the NFL draft. And I guess it maybe took my mind away from the markets a little bit. We had quite a few up days last week, and then we come in here on Monday and Chicago wheat downside leader. KC wheat, spring wheat, though, kind of a mixed bag, maybe some intermarket spreads there. I don't know. It just sounds like that maybe still some concern for the HRW wheat belt, but then maybe a little improvement in Russia, a little improvement in U.S. soft red wheat areas, and that kind of led to some profit taking, it felt like, on Monday, John.
Yeah, kind of a volatile market, wheat market today, especially on this, the Chicago wheat with its bigger push lower. And that all started on Friday afternoon when we had a nice run out. And then we saw that kind of a correction. Technically, it wasn't a real good close on the charts there in terms of momentum. Got that follow through today. I do think first notice day was a factor in the grain markets today, as well as anyone long a May contract needs to be out or risk delivery here by the end of the day today. So I think that brings some extra play in. That's why you see some of the numbers, like spring wheat, we got 18 cents higher on that May contract. That's probably tied to those issues a little bit more. So we'll see how it shakes out over the next couple of days. The biggest thing is let's keep focused on the weather there. HRW or KC wheat, we did see some rains in the eastern belt for that, but again, the western side stays dry. So we're going to continue to watch what happens to those crop ratings that'll come out this afternoon. Probably will continue to see them slide. So that's adding a little bit of support to that market over the Chicago market. And then you go into the spring wheat with some of the rains that are forecasted, some of the rains that came through. Maybe we got a little bit of a planning concern up in that regard. So putting a little wet weather premium maybe into that SRW crop, the HR hard spring wheat crop. So that could be part of the play as well today. So a lot of little moving pieces, but it seemed to be a little bit of a wet blanket that definitely probably stayed on top of the corn market today. But I'm going to give corn a little credit. We had a chance today. It looked like when we were pushing about 4 down, it felt like it was about ready to crack and make a slide. And buyers kind of stepped in and kept us basically tied to that 440 May, 450 July price levels. The market finished relatively quiet overall on a choppy kind of a day. And you hit it. First notice day here. I think I would agree with you. That seemed to be a big driver, plus the weekend weather, and in some cases rain makes grain here a little bit. Just kind of a choppy market. And to your point, when we saw options expiration last week and then first notice day, I mean, you even highlighted this for me. May oats were all over the board on Monday, John. So, largely, I think to your point, just some of that end of the month volatility is something to watch here, not only from Monday's trade, but even into Tuesday and Wednesday probably as well here, John. Yeah, it just really felt like a lot of rebalancing going on today. I mean, let's go back to last week. Basis contract, you mentioned May options expiration. Here comes first notice day. We got the end of the month, coming right around the corner here as well. So I think it's just a spot here. We're just seeing some money maybe try to focus on where it wants to go, square itself up. And that's, I think, some of the reason we're just so doggone choppy I got myself scratching my head right now. Do I want to stay a little longer? Do I want to stay aggressively on the defensive side? And where are we at with things? And it's just kind of a tough window right now to really get a grip on what's going on. The other thing we haven't really talked about too, in that corn market that's been very friendly, talking to producers, the basis levels are very good out there on the cash market side. One producer was getting 20 to 30 over the board, trying to get some, as these end users, no guys are busy. They're in the field. They want to pull, while we got a little moisture, maybe they can get some corn sold here. So they're throwing some incentive to do that. So that leads you to a couple different questions. I mean, obviously, we know what's in storage according to the grain stocks report and things of that nature. Is it maybe the supply is not there, or are guys being that tight-fisted with it right now with the grain bins locked? I think it's a combination maybe of the two. We'll see. So there's some things that have been just kind of preventing this market from wanting to just fall apart. But again, at the same time, there's just enough things over top of it that we just can't go anywhere. And realistically, if you draw a line right through the middle of our trading range going back to February, we haven't moved too much off either side of that. For that July contract, 450 on the top here and 435 on the bottom. And we've just been ping-ponging back and forth realistically since the middle of February.
I wonder too here, John, as we're working through U.S. planting, and we'll see where things go. I know another active weather pattern here this week that could slow us down a little bit, but we'll see what the crop progress numbers out Monday afternoon or look like here and how that plays in. But I feel like the next few weeks ahead here, we got the big May WASDE report coming up on the 10th. And I wonder if this trade might not, once we get through the beginning of the month and all the different options and first notice day, et cetera, here and rebalance things, I feel like this trade could maybe chop around into that May WASDE report, John.
Yeah, there's a possibility we could even see some selling into that report as well. We're expecting those 24-25 numbers to be relatively heavy. I mean, they're going to use trendline yield 181. We got the acre number, from the March intentions report, right or wrong, and that's going in there. Then we got to assess what the demand's going to be, and we're looking at carry out 2.3 to 2.5 million or billion bushels for next year. And you're talking to stocks use in that 15 to 16% window. And that's some of the highest stocks use ratio numbers or percentage numbers since 2006. So a market might start positioning for itself there, especially if planning is where we think it's going to be today, around 27% done. We'll obviously have to really watch that with the weather forecast coming up over the next handful of days. It might be kind of tough to get some more acres in some of these regions here, maybe into that report. So that's something we'll have to watch. Biggest thing is for corn on that. That's probably going to be our biggest number for the year in terms of carryover, because any adjustment off of the yield from there due to planting issues or weather issues or wherever, that's only going to bring carryover down. 181 seems extremely high, but if we have a good year, it could be done. But we haven't done that for quite the last handful of years. So it's one of those things that could be interesting how the market handles that number. We talk about, and I don't think that 2019 is going to happen. When that was our year, we had nearly 20 million acres of prevent plant. The funds were sitting as short as they were, if not shorter, during that time frame. And we got to that May 10th report. And that's what it is again this year. We got that USDA number. That very next Monday, we turned over. We had a slow planting pace progress report on the 13th of May, and we were off on a dollar rally in less than a month. Just because the shorts wanted to cover. Not saying that's what's going to happen here, but that might be something we need to start thinking about, is maybe we got some volatility coming here, especially if the planting pace really were to slow down. This market's going to take that number for next year and immediately start discounting it because of the fact, the carryover could be coming down. Now, just to put comparison on that May report in 2019, we're at 2.49 billion bushels of carryover. So it just kind of shows you, even though the numbers are still big, we could still see a pretty good rally if the market feels that way because of the shortness of the positioning. So that's something I'm kind of thinking about right now. I'm going to be watching very closely. Same thing kind of goes with the soybean market there as well. Biggest problem with the soybean market is still the competition from those South American supplies that are coming at us. Corn's at least got a leg up right now, at least in terms of the demand side, that could still support that market. So getting a little more friendly corn, not bullish by any stretch until proven otherwise, but at least at the stage where, hey, if things start moving higher here, we do want to make sure we're attacking that aggressively with sale targets, put strategies, things underneath, finishing out that 2019 story. We peaked on the 17th of June. By the middle of September, we were below 350 as our fall low.
John Heimberg with Total Farm Marketing is our guest today here on Market Talk. John, let's go to livestock trade. Cattle and hogs both just, it felt like traders were cautious there Mondays. We're getting to the end of the month. They're thinking about, what is that summer demand picture going to be for beef and pork? Weekly export sales haven't been phenomenal. And I know as well, it's Fed week on Wall Street, so you throw in that as well. I just think overall, this protein complex just trading very cautiously to start off the week here, John.
Yeah, I think that was a big part of it today. It was some back and fill. We had such a good close last week, supported by the cash market. I'm looking at that June contract as we're getting real close to April expiration here. We got through the 100-day moving average on Friday, closed above it. We just went back tested and held it very nicely this week, at the start today. So again, still think the path of least resistance right now at least still looks higher. Obviously, we got to continue to watch the headlines regarding avian influenza. Again, that just does not want to go away. Maybe that was a little part of it, just taking a little risk off here after, again, like I said, a pretty good close last week. But again, we're looking at still a series overall of higher highs and higher lows as we're trending, upward here off that low from mid-April. Now we need to continue to see the cash flow come through in terms of cash trade. Retail values were firmer at midday. Again, like see that choice get back up over that 300 window, trading at 297 today. So there's some things I still really like about the market. Plus we just have a discrepancy from the cash market to the futures market for both lives and feeders. That discount of the futures market to cash is something I still think is supportive overall and, can push this market a little bit higher. But like I said, today felt like just a little bit of back and fill, just going to check that support level at the 100-day, and it held, and we'll see what tomorrow gives us as long as those retail values stay firm. Hogs, on the other hand, that's a chart that's kind of all over the map right now in terms of where's the money flow. We've seen the funds really run this thing out, backed off a little bit, started buying again as we got that double top. But the fact that we didn't come back last week and take out that previous high, and now we're washing back down, retesting the lows, building that quote unquote triple bottom in this most recent range, makes the chart look a little bit defensive to me here, that we could continue to see some money flow, and maybe that June hogs better off being around 97 versus 102.
Well, I wonder too, especially on the hog side, if products can help support, cash can help support. I think at one point I saw the pork cutout on Monday was up like $7. I mean, typically that's supportive to the futures the following day. And we talked about hogs getting a little top heavy here, but I wonder as we get into summer grilling season, if we get decent demand on the pork side, maybe a little less on the beef side, if that could help support this overall hog complex, John.
Very much so. Again, the consumer dollar is still a big part of this. That's going to keep both these two markets kind of in check at times. Is going to be that concern regarding the consumer, where's inflation, all those things. One last little point on that hog market, that the cash index has basically traded higher every week since the first of the year until last week when we were down a whopping 3 cents. And then we start cash trade this week on the index down 55. So are we seeing a rollover in the cash market here as we maybe hit our spring high? That could be a factor to watch, because that's been underlying support here, has been those fundamentals. Retail values have been strong. Cash markets continue to trend higher. This is kind of the first little glimpse we've had since the first of the year that maybe that cash market might be getting to a peak.
John, how about the dairy trade? Any notes for us there this week?
Well, back in the $18 milk for dairy producers, that's probably very welcome to see. Obviously, it's not the mailbox price, but at least we've had some decent support. It feels like the milk market's kind of moved past the HPAI type information, and the money's flowed in. Now, with that, we need to still find some equilibrium here. Cheese trade was unchanged today. Maybe the milk market got a little bit expensive up in this window right away, too. I think it's an opportunity for producers. Make sure you're hedging up. Maybe get out into some of those summer months here, because again, now we're back at the top of this range and then some. Maybe the milk market's got a little bit too much value in it off of that quick price move. Again, one of those slowly traded markets, at least in terms of numbers of volumes, so things can move extremely quickly. You know, it was just the 1st of April that we were hoping this thing would stop falling apart in the mid 15s. And now here we are at the end of April in the mid 18s. To me, it's a window that you're going to make sure you're taking some advantage of that as a producer.
John, good stuff. As we wrap it up here today, any final thoughts you'd want to share or reiterate with folks listening in today?
You know, again, just make sure you're taking advantage of opportunities, especially in that cash market for grains right now. Like I said, there's some pop in that market out there. We still got some supplies that are still heavy overall. No matter if we even shave a few 100 million bushels off, we're still got plenty of corn coming. And that's still, I think, going to be a wet blanket over this. You know, guys were pushing hard last week, so they weren't selling. End users want a little supply. They want to make sure they lock it in here again just before we get into the next major planning window after these storms. So here comes an opportunity. Make sure you're taking advantage of it. You know, I'd still rather be wrong with defense given the supply picture longer term than be missing out on that opportunity. This market is still going to have a heavy supply picture in it for corn, strong demand competition for beans, until we get proven otherwise later on in the year. But at least this time frame, take advantage of opportunities when they're there.
John, if folks want to reach out to you, get some advice there at Total Farm Marketing, how can they get in touch with you?
Sure, love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
Always appreciate it. John Heinberg with Total Farm Marketing. John, thanks for joining us. Have a great week.
Sounds good. Have a great week.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.